What's going on, everybody? I hope you had a Merry Christmas and spent valuable time with your family, got a little break from the market, break from work, a chance to recharge, reset. In today's video, I want to talk about Bitcoin. We are approaching a breakout of a trend. We're actually above it right now. And I also want to talk about what we have seen in every crypto winter and why this time may be different. First off, Bitcoin. I would love to see how this candle closes. Do we start selling off at the end of the daily candle, get back in this trend line? This is the first candle. If we close, this would be the first candle to close out of this trend since our peak back in October. This could be a big deal. We could get a big reaction out of this. The problem is, we have seen in the past where the price goes above, but then we come back down only to get a wick, not to get a candle to close above. If we see this candle close above, I think that would be a fantastic sign. If we don't, there's a good chance we revisit our lows. But currently, ever since Bitcoin bottomed out in pretty late November, right around that death cross, we haven't really revisited those prices. Bitcoin bottomed out here at like 80,500, and we've been kind of hanging out in the mid to high 80s. Here's this same trend line on the weekly. You can see that from a weekly perspective, we are still stuck under this trend line. But if we can get some momentum on the daily, get a nice little reaction, a good breakout, we could likely see our next weekly candle coming above this trend line. And if we do get that, I think what comes next is a test at the very least of the 50 MA that's currently sitting at about 102,000. This is a very significant indicator. For one, it was an indicator that we respected throughout the cycle, this bull cycle, and we have held up. Until we didn't, we broke it, and we got a pretty big reaction on it as well. In the past two crypto winters, this has been an indicator that has marked more downside once it became a resistance. But every time we did get a test of it, we haven't seen a test yet. I do think a test of the 50 MA weekly is coming soon, possibly on the break of this trend line. But in the last cycle, the 2022 bear market, we got a test of the 50 MA on the weekly, and we got rejected. In the cycle before that, the 2018 crash, we saw a test of the 50 MA before we dropped further. As a side note, from this drop from our all-time high in October, the RSI has cooled down significantly. And while we're not oversold like we have seen in past crypto winters, we are not that far from oversold. So in my opinion, if we do get rejected on this trend line, if we start falling, I think it would be a great time to take advantage of Bitcoin, knowing that we might see lower prices if our lows don't hold up. If that 80,500 doesn't hold, we're likely to visit the 70,000s, which in my opinion would be a great time to accumulate some more Bitcoin, take advantage. Here's something interesting from Plan B. Bitcoin is currently way off its historic correlation with not just stocks, but also gold. Here's a gold index, here's the SPX, and the pink dot is Bitcoin. He goes on to say that this has happened before when Bitcoin was below $1,000 and resulted in a 10x pump. Correlation could also be broken, and then this time will be different. Time will tell. Here's one thing that's really interesting that Bitcoin does tend to correlate with: what the Federal Reserve is doing. Are they in a QT or quantitative tightening cycle? Are they in a QE or quantitative easing cycle? Are they hiking rates? Are they lowering rates? You'll find out that while the Federal Reserve was not in a rate hiking cycle during every crypto winter, they did tend to be in a tightening policy. For example, Bitcoin's first crypto winter, they also include 2011, but Bitcoin's first crypto winter, the early Bitcoin crashes occurred as the Fed ended or began to taper their QE programs, which wasn't a time of hiking necessarily, but was a time that they were starting to tighten their policy. The 2018 crypto winter, the Fed was reducing their balance sheet and hiking rates, which began in late 2017, right around when Bitcoin topped out. And the Fed funds rate, or basically the interest rate, reached the highest point in Bitcoin's history at that point. Now 2022, many of you remember what 2022 was like: massive hiking cycle by the Fed, and also QT. This period saw one of the most aggressive and rapid rate hiking cycles in the Fed's history because of the high inflation that we had. This tightening of financial conditions was a major contributor to the sharp decline in crypto and other risk assets. Now, what is QE? Explained pretty simply. The central bank basically creates new money out of thin air and adds to their balance sheet, rather than reducing their balance sheet like with QT. They buy bonds. They then inject cash into the system. It tends to lower interest rates. Sometimes they're in a rate cutting cycle at the time as well, which we are currently in a cutting cycle. But when there's extra money in the system, it pushes down basically the percentage rate you get for bonds. Lower interest rates make it cheaper for people to borrow money, and it encourages economic growth. Many of you know that the Fed is now entering a QE cycle. On December 10, the Fed announced their plan to purchase $40 billion in treasuries each month for at least 4 months. Bank reserves will increase, meaning liquidity concerns should lessen. Now, many of you know based on the 4-year cycle we're entering 2026 is typically a crypto winter year. This is the interesting thing. This is the first crypto winter where we're actually getting QE, which should boost liquidity throughout the market. And this is why things could play out differently than past crypto winters. And just look at this correlation. This is Bitcoin and bank reserves. As the reserves in the banks rise, Bitcoin typically rises. As the reserves in the banks fall, or we get into a period of QT, tightening, you see Bitcoin drop. This was 2020 to 2021, which was an anomaly year and is kind of the exception here. But otherwise, you can see that correlation. Typically, when Bitcoin's topping out, the bank's reserves are topping out before they enter into a cycle of tightening and lowering their reserves, which also coincides with the crypto winters. This is one reason why I think that 2026 could be a bit different. And this could also be why crypto winters, we see a kind of a pattern. We don't just see every crypto winter and then the following see less of a drop, although that's the general trend. We saw the largest drop in the 2018 bear market at 83% drop from its highs. In the first crypto winter, a 75% drop. In our last crypto winter, 2022, a 73% drop. I personally think a lot of this has to do with the Fed's policy. Not only are we in a QE cycle for the Fed going into early 2026, we're also in a rate cutting cycle. Although our next meeting in January does show more probability of leaving rates current, skipping to their next meeting in March. They do skip a month, they go like 2 months in a row, then skip a month. But anyways, going into March, you'll see about a 50-50 chance of either a rate cut or leaving rates current, like a 7% chance of 2 rate cuts by then. But we're not only in a QE cycle, which traditionally helps Bitcoin risk on assets and helps the economy in general, but we're also in a rate cutting cycle, which makes it easier to take out loans, easier for companies that are risky to take out loans that are a lower interest rate. Now let me know what you guys think. Do you think 2026 will be a little different than past crypto winters because of what the Fed's policy is? And this will basically be the first crypto winter where we're getting QE rather than QT. This leads me to believe that 2026 will play out a bit different. Can we drop more from here? Certainly. And if you follow Bitcoin's 4-year cycle, you should expect that. But I personally say, and I'll go on record saying this might be the least amount percentage-wise of a drop in any crypto winter because of that backstop by the Fed. Because they're going to be injecting the market with liquidity. Regardless of what happens with Bitcoin, take advantage during the crypto winters, take advantage during the pullbacks. These offer us the greatest opportunities to make insane multiples off Bitcoin, not just Bitcoin, but Bitcoin miners, other Bitcoin proxies like MicroStrategy. You buy them during crypto winter, patiently wait for around 2 years, and start trimming. Also, don't forget what comes after 2026. Going into 2028, we have another Bitcoin halving, which tightens the supply of Bitcoin even more, and always leads to a price increase. It's as simple as supply and demand. But thanks as always for watching, guys. Hopefully you've had a good Christmas break, Christmas vacation, spent time with family. Keep an eye on Bitcoin's trend. I do think we're going to see a reaction if we can see our candle close above that trend. And this may be the start of a run to the 50 MA on the weekly, which will be the next important thing to watch to give us an idea of, are we entering that next phase of crypto winter, getting rejected at the 50 MA weekly, or do we break above it and sort of break the cycle in a way? Thanks so much for watching, guys, and I will see you probably tomorrow.